I wasn't surprised at all that in this month's survey where you guys, the viewers, get to choose what topic I cover next, inflation was the clear winner. So a big thank you as usual to everyone who voted in this month's survey. And for those of you who are newer to the channel and have missed it, I will make sure you're subscribed to my channel so you're able to vote in next month's survey. Nothing makes me happier than making the content that you guys want to see the most. So inflation, the dreaded word that many investors are making a big stink about these days. The fact that money loses value over time is always in the back of investors' minds, right? This is even though inflation is built into our current economic model because we use fiat currency. So our money is not backed by anything physical except for our trust in the government, right? But I'm not going to get into all that in this video because there's no point discussing something that's out of our control. That's my opinion. Instead, I will focus on what everyday investors need to do in order to mitigate inflation, because you cannot fight inflation, you can only try to mitigate it. So in this video, we'll check out the best ways to mitigate inflation together, and then I'll go through the 4 main reasons why I'm not worried about it at all. Alright guys, so let's check out some ways to hedge against inflation or to try to mitigate inflation. Whenever I have these types of questions or I want to do research on these types of topics, I always usually go to Investopedia. This is my go-to place when I'm looking up investing terms or investing strategies or just definitions in general. I strongly suggest it. It's basically Wikipedia for investing, right? So, and it's not the only place I've looked at, but out of all the articles that I've looked at, they pretty much say the same thing. So this one, the top 5 ways to hedge against inflation. If we actually look at the reasons real quick, let's check them out, and then I'll give you my personal reasons and how they translate to this article or to their reasons here. So number 1, reallocate money into stocks. So this is pretty much a no-brainer, guys. Obviously, what this point says is you should have stocks, because stocks are actually, go up over time. So this is why it's a perfect hedge against inflation. So it does talk about buying preferred stocks as a possibility. Personally, I'm not too big on preferred stocks. I just rather get regular dividend paying stocks. And then it also mentions utility stocks is a good alternative because, like we all know, utilities is very defensive. No matter what the market cycle is doing, they continue to pay steady dividends because everyone needs their electricity, right? So that's reason number 1, and honestly, it's the number 1 reason in all the other articles as well to buy stocks. Number 2, diversify internationally. So this is really their premise behind this is it could hedge your portfolio against domestic economic cycles. So I'm big on diversification, as you all know, not only in a region, but also in sector. So this is really a regional diversification they're talking about, guys. So if you're in Canada, you don't want to invest only in Canadian corporations. You want to grab the biggest market in the world, the US companies, as well as abroad. I mean, it's not necessary to really go everywhere. I'm not too big personally on emerging markets, but I do like the developed economies such as Northern Europe, for example, France, Germany, UK. There's a lot of developed countries in Europe, as well as Japan and Australia. So that is their point number 2 here, diversify internationally. Point number 3, consider real estate. Of course, this is a no-brainer, right? Real estate or real property often acts as a good inflation hedge. That's because, like stocks, real estate are assets and they tend to appreciate over time. So owning real estate is a great way, and not just physical real estate, guys. They actually mentions here one of the easiest ways to get exposure is not by buying a house, it's through REITs, real estate investment trusts. So if you don't know what those are, if you're newer to the channel or newer to investing, REITs are basically real estate investment trusts. So they are publicly listed securities just like stocks, and they hold a portfolio of physical real estate. So it's just like owning real estate, but a really small piece of it. And these REITs tend to give you nice monthly dividends. And we're not talking about just residential here, guys. We're talking about commercial, which is office and retail. And then there's industrial and medical buildings. So there's a lot of flexibility by investing in REITs. So that's number 3. Number 4 and 5 are just lesser known stuff here. Look to tips. This is pretty much from what I could see, I don't know exactly what tips are, but it says Treasury inflated protected securities. So it seems to me like they're, government bonds, stuff like that. Then there's also buy bank loans. So bank loans is another way to hedge against inflation. So I don't have much in terms of bank loans. That stuff is more prevalent in the U.S. market, and I do have a lot of funds on my RRSP side, for example, that has some loans and more fixed income securities like tips and bank loans, I'm assuming. So then the article keeps going and talks about gold, because that's typically what most people think, that gold hedges against inflation, and it is true. But this article goes to show that gold works best as an inflation hedge only over the very long term, 100 years or more. So I don't know exactly how true that is, but I do consider gold a good hedge against inflation myself. Obviously, you don't have to buy the gold bars and store it yourself. Now you could just buy ETFs that are backed by physical gold, or even the gold miners and producers, which I have some in my portfolio. So I won't go into it further. You could obviously read the article completely. I will put it in the description below. Then it also mentions Bitcoin in this article. Is Bitcoin a strong hedge against inflation? Theoretically, it could be. That's what the article says. But as we know, Bitcoin is not backed by anything physical. So I personally, in my opinion, would not consider Bitcoin a hedge against inflation, although theoretically it can be, or it should be. So now let's go over the 4 main reasons why I'm personally not worried about inflation, and the points in this article should give you quite a good idea of the 4 points. So what are the 4 reasons that I'm not worried about inflation? Well, number 1, biggest one, I own stocks and I'm diversified both in sector and in region. So this is a no-brainer, right, guys? Of course, this is the number 1 reason. This is why I don't understand why other investors are so fearful of inflation. Owning stocks is pretty much always the number 1 hedge against inflation on any article or list that I've seen. Think about it. Stocks inflate with inflation. They go up. So owning them is how you mitigate inflation, or where money loses value. Stocks are assets, guys. Never forget that. They're not some abstract, complicated thing which are only good for financially savvy or for rich people. It's much simpler than what most people think. Stocks are businesses, the best businesses in the world, and owning shares is being part owner of the company, no matter how small the percentage is. So for me personally, pretty much my entire net worth is made up of stocks. This is why I'm not worried about inflation at all. Also, I'm very big on diversification, both in sector and region. So just like the second point of the article says, diversifying internationally also helps mitigate local currency inflation. So although my portfolio does focus a lot on North American stocks, Canada and the US, I do have some international exposure as well, like the European markets or the Asia Pacific markets. So I got exposure to these areas with funds like ZWE, which focuses on Europe, ZWG, which focuses on the whole globe, and those are from BMO. Or even GDV from Brompton, one of my favorite split share funds, which is really, really well diversified in terms of sector and region as well. So there's exposure to those international markets with these funds. It's really not that hard to get exposure to these markets or international markets nowadays, because we don't need to hunt down the individual stocks ourselves. They're included in many ETFs that fund managers manage for us. So we are absolutely spoiled for choice, and it's never been easier to invest. So asset prices inflate with inflation. Just look no further than the current stock market record highs. That just proves my point, right? So if you're an investor that owns stocks, which I'm sure most of you watching are, we already got the number 1 thing covered. Now, what if you're an income-focused or income-seeking investor like myself, rather than a growth investor or a dividend growth investor? So the difference is that an income guy usually has a lot of covered call strategy in their portfolio, which means you are giving up some potential capital appreciation or upside for more income. So my response is that this is, my response to people who say that my strategy is not tailored to mitigate inflation is that this is simply not true, and it's actually a pretty silly statement in my opinion. Number one, not everything I own in my portfolio uses the covered call strategy. About 25% of my main portfolio does not use the covered call strategy at all. Number two, even if the funds do use a covered call strategy, they don't write covered calls on all the stocks or the entire portfolio in the fund. I still have plenty of participation in the growth of the stock market, even if it's definitely not as high as a growth investor. So BMO writes out of the money calls on 50% of the portfolio, on half the portfolio, for example. So out of the money call, guys, means that you still participate in share price growth even if the calls are exercised, right? Because the share price is higher than the strike price of those calls is always higher than the current market price. CI Global Management, another example, writes covered calls on only a quarter or 25% of the portfolio, so 75% participation there. Harvest does about 33% or up to 33%. So in addition to that, fund managers tend to write less covered calls during a bull market. These guys know what they're doing, guys. They're professional asset managers and they write covered calls for a living. By the way, if you have no idea what I just said, no idea what covered calls are, covered call strategy is, check out my videos on that topic. I even have a specific playlist for videos that discuss that topic. Number three, covered call or not, these are still funds that hold stocks. Being an income investor or growth investor, we both hold the same stocks, the same companies. The only difference is that we get our returns differently. Growth investors get it mostly via capital appreciation because they make a very small yield. Income investors primarily make the returns via the yield or the income. So I repeat, we own the same thing, but we're just getting our returns in a different way. Reason number two, I own real estate. Just because I don't own my own home and rent does not mean I don't own real estate. To the contrary, a big portion of my main income portfolio is real estate, about 20%. Same goes with my RRSP account, which is not part of my main portfolio, but more on that in a second. So this was really the third point in the article, right? Real estate is the classic hedge against inflation. It also mentions that the easiest way to get exposure to real estate is via REITs. So these are essentially, like I mentioned before, publicly listed investment trusts that own a portfolio of physical real estate, not just residential, commercial as well. So why own one home or a couple or an apartment building and deal with all the stress, all the anxiety that comes with it when you could just own REITs instead? It's so much better and so much easier. Trust me, I've owned a paid off condo for years and that's not even that much work at all, and it was still annoying to me. Things broke, I had to deal with plumbers, painters, electricians, etc. I see my parents, my grandparents, and other family members who all own income producing properties which they live in, and I would not wish that type of lifestyle on my worst enemy. The time, the precious time, the stress, and the nonsense that you have to deal with, or that will have to deal with. It's really true what they say, guys. You don't own the home owns you. So REITs are definitely the way to go, in my opinion, in order to own real estate. Not only is it 100% hands off, but you have way more diversification and safety. That is why I always laugh when people tell me, but don't you want to own your own home? No, I really don't. It's 2021 and you don't need to. It's super silly if you ask me, especially now where real estate is selling at a huge premium anyway. So I've tried both renting and owning, and renting is so much better, guys. I'd much rather own different types of real estate all around the world and do zero work while collecting the monthly income, not be worried at all about my rental if anything happens, because I don't own the place. But that's just me. Reason number 3, my RRSP accounts are compounding monthly. So in case you didn't know or you're newer to the channel, guys, my main portfolio or my main income portfolio, which I unveil and showcase from A to Z every single month, is not all I have. Our 2 retirement accounts for me and my wife, or our RRSP accounts, which we also manage ourselves, are not part of that portfolio. They are separate. So in the US, the IRA would be the equivalent, right, to the RRSP, and I don't know exactly how the IRA works, but here in Canada, the RRSP account is an awesome gift that the government gives us on top of the TFSA account. It would be foolish to ignore this gift because all the growth, whether it's via capital appreciation for growth investors or compounding dividend interest for income investors, all grows tax-free within the account. You only pay taxes on it later when you turn your account into a RIF, which is kind of an annuity, and the taxes you pay on what you extract are very low because you're taxed at your marginal tax rate, which is much lower when you're retired, right? Because you have no salary income coming in. So a big criticism or comment that I get is that my main portfolio does not hedge for inflation. Well, my RRSPs combined are now making just under, or compounding just under $3,000 a month, which is basically 10 to 11% yield annually, thus increasing my income and capital every single month. So in 20 years from now, the accounts should be worth several $1,000,000. So this is because unlike my main portfolio, I'm not extracting any of the income whatsoever. The RRSP account was not designed for this. And if you do that, you will pay all kinds of penalties and withholding taxes and on whatever income you extract from your RRSPs if you do it before retirement or before you turn it into a RIF account. So the RRSP was really designed to grow a nest egg, to be a supplement to the government pension, which we all know is dismal. So the best trick I could give you for those watching who scarcely invest in their RRSP or IRA is to make it automatic, or make the contributions part of your monthly budget like a regular expense along with your phone bill and utilities bill. This was a great tip and mindset technique that I learned from reading a book called Automatic Millionaire by David Bach when I was like 20 years old, and it's something we continue to do to this day, which was a really smart idea. So the premise of this book is really to make things automatic, set up automatic withdrawals so that no matter what, the RRSP contribution will be done. It will be taken right out of your bank account like a phone bill. So this makes perfect sense because if it was up to us dumb humans, it probably would never get done, right? Or done at the very last minute. And on top of all this, guys, RRSP contributions lower your income dollar for dollar. So not only are you growing your nest egg tax-free, but you get nice annual tax refunds along the way. What more do you want? All right, so last reason, number 4, I keep on investing regularly, thus growing my monthly income and capital. So when it comes to my main portfolio, guys, which is made up of our 2 TFSA accounts and our 2 cash accounts, I extract all the dividend income every month to pay all our living expenses. So that's true, but it doesn't mean that I have no money left over. On the contrary, after our living expenses are paid, we have thousands left over every month. So sometimes we spend it because we like to have fun like everyone else, right? Go on trips, get some gadgets, whatever. But we typically always have leftover disposable income. So what do we do with it? Invest it, of course, thus growing our monthly income and our portfolio month after month. So what better way to mitigate inflation than to increase your income every month? What better way to spend money than to invest it to make more money? So if money slowly loses value over time, the best way you could mitigate it is simply to make more money. It's as simple as that. So there you go, guys. In short, I'm not worried about inflation at all. Not even a little bit. I refuse to waste any mental energy worrying about it because it's simply a fact of life. And of course, all those points I mentioned, right? Of how I and how you can mitigate inflation. So the people who really should be fearing inflation, guys, are people who don't own any assets. Assets appreciate over time while currencies depreciate over time. So you need to balance it out by investing and owning assets. The key is really to buy as many assets as you can, whether it's stocks or real estate. In the history of humankind, it's never been easier to buy these assets right now, thanks to the technology we have and all the online brokers we can choose from. Heck, some even offer zero transaction fees now, like Simple. So it's very easy. Everyone could do it. So join me in fighting the never-ending war against inflation by investing regularly and consistently every month and pushing that inflation worry right out of your head. I'm definitely not worried about it. Life is short as it is, and I have much more important things to worry about. Don't you? So there you have it, guys. I hope you enjoyed the video. Please make sure, as usual, hit that thumbs up button so you support me and this channel. It's free for you. Helps the channel grow. Obviously, make sure you're subscribed as well so you don't miss out on my future content, as well as the August survey of the month, where you, the viewer, can decide what topic I cover next. Also, make sure to check out our website, passiveincomeinvesting.ca. That's where you could buy my digital product, the ultimate dividend passive income investing package. I only charge $45 for it, and it includes basically all my years of research in one spreadsheet. There's multiple tabs in there where I list the top funds for growth, for income. I have sample portfolios, and it's good for both Canadians and Americans as well. So the package comes with free lifetime updates. I'm on version 2 right now, and I'm working on version 3.0. So if you purchase it now, you will get the third version for free. Also, on my website, I do offer a one-on-one video consultation service with me personally. If ever you want to ask me a million questions, you want my help to build a portfolio, to modify an existing portfolio, whatever your needs are, I will do my utmost to help you. I've done over 100 consultations thus far, and I absolutely love doing them. It's very easy to book a one-on-one. It's right there on my homepage. There's a calendar. Right now, I'm fully booked, but the August appointments will be opening up soon, probably by next week. So stay tuned for that. And all you need to do is choose a free date and book the appointment. Also, guys, we're on Instagram, we're on social media, we're on Instagram and Facebook, so make sure you join us there if you use those two platforms. We have a Facebook group that keeps growing. We're at over 1,800 members now. We've got a nice little community there, so it's really, really cool. And of course, I'll leave you with thing I leave you all the time. Our mission, my mission of this channel is always the same. It's to help everyday working people to invest on their own in order to build their own source of passive income, so you can enhance your quality of life and one day also become financially independent. So with that, take care, guys, stay safe, and see you next time.